Uh, Good evening and a warm welcome to all the distinguished members, esteemed guests, and fellow members to this webinar organized by Internal Audit Standards Board of ICI on the topic From Controls to Confidence, Strengthening Governance, Risk and Compliance through Internal Audit. I welcome you all to this webinar. I am CA Mrudula Joshi Dapke, and it is my distinct pleasure to serve you as a moderator for today's session. Internal controls form the backbone of an effective governance, risk, and compliance framework. They ensure that organizational objectives are achieved efficiently, risks are identified and mitigated in a timely manner, and regulatory requirements are consistently complied with. Well-designed controls promote accountability, accuracy of information, and ethical conduct across all the levels of the organization. Internal audit plays a critical role in evaluating the adequacy and effectiveness of these controls. Internal audit also identifies control gaps, emerging risks, and process inefficiencies, and recommends practical improvements so that the systems and processes can be further improvised and the processes can go on smoothly. Today, we have the privilege of hosting a distinguished speaker, CA Vijay Srinivas Kothapalli, who will delve into various facets of internal audit, sharing his invaluable insights and practical experiences. Welcome, sir. Welcome to the webinar. I will give a brief introduction of our speaker, CA Vijay Srinivas Kothapalli. CA Vijay Kothapalli is a fellow chartered accountant in practice based in Hyderabad. He is also a law graduate. He's a partner in the firm C. Ramchandram and Co. Hyderabad and is practicing for more than 24 years in the areas of information systems and security audit, IT and cyber security framework and policies, advisory and policy maker on anti-bribery, anti-money laundering, data privacy and protection, forensic audit, and fraud detection. He is also a public speaker on various topics which I mentioned above. Along with this, he has also made some remarkable contributions to the Institute of Chartered Accountants of India, which include contributions in the field of digital accounting and assurance, for which he has done drafting of information system auditing standards, and he has worked for the Professional Development Committee, that is the PDC, Digital Reengineering and Transformation Directorate, Committee for Members in Practice, Board of Studies Operations. He has worked. He has made contributions to the Peer Review Board, Auditing and Assurance Board, AI Committee, Financial Report Review Board, and many other committees and material of the Institute. I would like to mention his certifications and his degrees which he holds, which is a very long list. He is a Certified Information Systems Auditor, CISA, by ISACA. He is a Certified Fraud Examiner, CFE, by ACFE, that is Association of Certified Fraud Examiners, certified in cyber security, CC, by ISC, and an insolvency professional by IBBI. He has completed his advanced diploma in cyber security and data protection laws from Nalsar University, Hyderabad. In addition, he has also completed certifications in CNSS, Certified Network Security Specialist, and CAISS, Certified in AI Security Specialist. He holds 6 post-qualification certifications of ICI, including Anti-Money Laundering Specialist, AMLS, a Diploma in Information Systems Audit, that is DISA, Forensic Audit and Fraud Detection, that is FFD, INDES, and many more. So welcome, sir. This is a a big uh, list of certifications which you're holding, and this will surely your PPT and your seminar will surely help us in gaining more and more knowledge in these areas, because these are very specialized areas and there are very few chartered accountants who delve deep into these areas. So welcome, sir. Welcome for the webinar, and I request you to start your PPT and your this thing.
Yeah. Thank you, Mrudula. Thank you very much for such a detailed introduction.
Yes.
And yeah, which always, when you read the introduction, that brings in more responsibility in the way I should be adding whatever I thought of, little more to that. And yes, thanks for the introduction. And thank you very much, Internal Audit Standards Board of ICI, the leadership of ICI, and also the leadership of IASB for bringing out this particular session and inviting me to address on this topic given. And thank you very much. And thank you, organizers, as well, for coordinating pretty well in ensuring that it starts on time. Yeah. So without much ado, let's get into the slide sharing, and then I'll keep sharing my views accordingly. Yeah. So the topic given is, of course, strengthening GRC, that is governance, risk, and compliance by as an internal auditor, ultimately. You might say why we are bothered about strengthening those things. I mean, it's a management responsibility. In what way, as an independent auditor, I am concerned about it, because you are giving your opinions independently, the assurance in whatever reasonable you are giving independently, so that those assurances should identify any issues to be plugged in, to be gaps to be identified. And as we keep on plugging those, that's how the GRC will become much more strengthened. So ultimately, it's a chain which starts with, of course, the management, but also ends with the management. But in between, the cycle, the main player will be the internal auditor, because he is the one who closely monitors and identifies whether it is up to the expectation what management has derived out of it. So that is where the topic is. So you might come out if any impression saying that why I'm taking the ownership. We are not taking the ownership. We are taking the ownership of our audit charter or audit responsibility, so that if we do our audit responsibility properly, that will automatically will strengthen the GRC of a company. Okay, so that's where the topic, it starts from the controls to the confidence. Before we proceed, of course, a disclaimer statement as well. One, of course, the whatever views I'm sharing should not be considered as a professional opinion. It's out of experience or various resources what I've accessed from, and out of my practical experiences. And more importantly, any images, whatever I demonstrated, those are AI generated. And by accidentally, if they resemble any of the copyrighted or patented proprietary images, it's purely coincidental. And of course, a couple of tools which I'm going to demonstrate, which are also developed through AI only. But ultimately, that's the technology which are going to help us in performing our activities much more with much more quality, provided we ensure the guardrails of those. Okay. So before we proceed, let's get into one important aspect. There is this very good article. Let me just open that article with regard to the compliance and regulations. And of course, I also would like to thank my partner, Premnath sir, who has generated a particular tool out of this particular article, which is helping us to understand the seriousness of this particular topic. Okay. So let me just share that. Yeah. So you also can access this particular article published in Orfo Online. This is a community. A couple of authors have taken a pain in coming up with a very detailed article, which actually speaks about the pain what any executive or a governance or any management might have to face in Indian system, where we had around 1530s. Of course, slowly they are getting brought down by the Union government by trying to simplify or probably codifying or merging kind of scenarios. But ultimately, yes, there were 1536 laws, and by virtue of this, you can see that around 25,537 ways a person responsible for the governance can be held guilty. Okay, could be jailed or could be penalized, whatever it may be. So that shows the intensity or the seriousness of the compliances topic what we are talking about. Obviously, the governance is the key role, which has to ensure that those have been taken care. But these numbers speaks pretty serious what we should be concerned about. And as we see, it also speaks about various acts, like we have legislative reforms coming in forms of Jan Vishwas Act, and we have labor code, we have new income tax code, we have DPDPA, pretty good number of acts coming in more digital form, which also puts a lot of responsibility, because once it is in digital form, if you are dealing with something like digital footprints, that becomes even more complicated for internal auditor if in case he is not equipped or he is not upskilled. Okay, so this is what you can just go to this particular article or online, you can search, or you can even put a Google search saying 25,537 ways a management can be jailed or something like that. Okay, so that's where let's start the topic, understanding the seriousness, and let's also come back to understand that, assuming I'm speaking about so many laws. Let's take a simple scenario. Why so many laws? Let's take up a simple scenario wherein how far the respective internal auditors have ever done any what we call gap analysis. Okay, as an internal auditor, I'll be doing different aspects, different activities to support the audit committee. Could be compliances, could be risk control evaluation, could be updating the risk register, or could be deciding the various aspects of governance. Okay, supporting the various aspects of governance through audit. So in spite of that, how many of us have actually taken time out to identify the gaps in what we are doing versus what is expected? Let's say, for example, you take up the last year report or maybe the last month report and check if in case the current labor code, which is in place, or the DPDP Act, which is also in place, except that a couple of procedural aspects have been postponed up to November and May, but otherwise Act and rules are pretty much there. Now, if in case the last month report or the last year report, if I have to compare with whatever these laws I'm trying to comply with, what are the gaps? Okay, so have I ever done this particular impact assessment or the gap analysis? That itself will show, forget about 1500 laws. You do it with one act. You pick up one act, one at a time, labor code at a time, or probably DPDPA or Cyber IT Act. You can pick up anything. Okay, so just see for this particular act, if you have to test my report in terms of whether it is addressing the governance, especially for those dealing with BFSI. Okay, governance is one strict point what RBI looks into, especially the banking and all, wherein there are good number of committees to be required, strategic committee, steering committee, RACI matrix to be developed, considering the management, and how you are connecting these with the responsibilities, roles and responsibilities. All these things are so minute, and we have seen good number of penalties being imposed across both banks and NBFCs merely by looking at one policy called governance. Okay, so there are policies, but not properly implemented. Policies are there, implemented is all implementation also taken care, but not properly rooted in a way it has to involve the governance or the management. So many gaps, so many issues are there. So this is where we don't even need to think of those hundreds or thousands of laws. One at a time, even if you test your audit report to see where exactly the gap is, what is the impact of those gaps, what we found on the GRC framework of an organization, you yourself realize the kind of issues what we are throwing up on the quality of GRC. Okay, so this is one point. Probably if you can just try this immediately and check those particular gap analysis or impact assessment, that itself will give a lot of insights into that. Okay, so that's where we start our topic, and we'll get into these particular things. Okay, so yeah, don't worry about these fancy images. Thanks to Notebook LM for providing these kind of images and all. But yeah, as I display the images, let me also share the viewpoints, what I thought of sharing. Okay, first thing, Why is that internal audit sits at the center of this GRC assurance? What makes it responsible, or what makes it sit in this particular architecture or framework of GRC? So basically, if you simplify the entire task, like when organizations talk about governance, risk, and compliance, and always the discussion starts at controls, is it not? So controls are the one which are visible, which are tangible, which are testable. Okay, this is what are the other side of the governance, that is the stakeholders, or even the boards and regulators, investors, lenders, customers, employees, whoever you call, they are not much interested in these controls, is it not? What they're interested is in confidence. My controls are able to give that kind of confidence to the stakeholders. This is what the testing point should be. So without any defined boundaries, and risks are understood, not discovered by accident. Are you getting? So it should not be like, out of checklist. I made a checklist. I performed the review of those checklists and I said everything is fine. And suddenly during review, something has come up, and which is accidentally has come up, not as part of my white box. So these are the things. Okay. And also, will any compliance failure will surprise the organization? I'm saying DPDPA is going to throw lot many such surprises, because the way we understand DPDPA, the way it is going to be implemented digitally, is far beyond what we are expecting. Okay, so no matter how much of gap analysis you do, and how much of preparedness you have, how much of structured way you prepare yourself for acts like digital personal data protection, still there might be surprises in the kitty. And also, of course, the governance structure, whether they are actually, will they actually work under the stress? This is what we have to question, is it not? So fundamentally, if I have to say, controls are the inputs, but the confidence is the outcome. So whether we are meeting with the outcome of those controls, if it is not so, as good as there is no control. So for me, controls without policy or without giving that kind of confidence is as good as no controls. Okay, this is the one point which, as an internal auditor, we have to understand, and that's where we have to bridge the gap, more importantly. Yeah, and as I said, no, it's all the talking points. What I'll be doing, it's not like I make some kind of running notes. I mean, if you are saying that it's only same slide and all, yeah, I'll be sharing the notes with the IASB, which they'll be circulating to the participated members. But yeah, kindly connect with the way I'm trying to explain this, rather than trying to pick up something from the slide or whatever it is. And many times organizations, they can easily demonstrate. They don't need to worry about saying that, no, to give that confidence. It's not that they have to give some proof of concept or proof of something like this. It's pretty simple. Policies are there, they're approved by the board, and all those SOPs, the standard operating procedures, have been documented and circulated to all the internal employees or who it may be. And there is a control matrices which are prepared with the help of internal auditor. And wherever the certifications are required in terms of giving assurance, could be VAPT, could be IS audit, could be cyber security, could be data related kind of thing, or even the controls related kind like IFC and all. Whenever you get these certifications, these small practices, what we follow, will itself show that there is a control, which is nothing but which gives the confidence, because these will be proving that there is a control. Okay, so saying so, merely because control exists doesn't mean that it is equal to the control confidence. Okay, this is the proof that I've given enough weightage to those, proof that I'm complying with that, proof that they are still been running. Okay, but there is something beyond that. Okay, something beyond, in a way I can give that confidence to the stakeholders. What is that? Now I need to identify, first of all, what are the risks an organization is facing. Okay, so we call it as a risk register, where we'll identify the risk owners, we'll identify the threats or vulnerabilities, we identify the impact of that, we keep a matrix of that, and we'll try to allocate the responsibility of mitigating or dealing with the risks and all. So these are all part of your designing the right risk. Okay, that's the first part of control. The second thing, these controls have to operate consistently. It's not that I choose selectively as per my convenience or as per my requirement at this point of time, as per the regulatory whatever force or whatever. So it should be consistent. Okay. And it should not be, it should be in a position to withstand any kind of pressure, not just the routine condition. It should be able to handle any kind of pressure. Could be on the end of the timelines, like the due dates, or could be in the absence of the key management personnel, or even in a case where something unexpected scenarios like COVID and all have come across, and such certain kind of unexpected scenarios also. Irrespective of that, my control should withstand those tests. Okay. And more importantly, more than anything, any failures, it should be identifying in the early stages. That is what my control is, preventive control. It should not be that after damage, I try to do some rectification or repair work. It's not of detective kind of scenarios what we will be looking for. The control is something which can identify any failures at the early stages. Okay. So this is what a simple question as an internal auditor will be asking. Can the organization rely on this control when it truly matters? Any kind of control. You take up any kind of control, what they have mentioned, whether it can withstand that particular, when the scenario comes, when the situation comes, can organization rely on that control? So now, if you go back to the checklist, what you have prepared, historical way of audit is like we have checklist, we have periodical certifications, we have compliance attestations. Okay, so whether these are sufficient on the table in the regulatory environment, or when the technology exposure is there, whatever it may be. So because current scenario, we don't have that kind of environment anymore. We don't deal with documents. We don't deal with platforms which are not digitized. So everything is interconnected. A risk we call it as a butterfly effect, wherein a slightest issue at one control, which is digitally linked, might have a huge impact as the time goes by in a different way. So in the ecosystem, even in the business ecosystem, if I'm not dealing with concepts like ESG, or not dealing with the environmental and all, it is going to come back immediately in a different form. So these are the interconnected risks what we are dealing with. No more isolated kind of thing. And when we speak about the laws, in the first slide, what we have seen, hundreds of laws, and we deal with technology which is changing so fast. Okay, you say you have your vendor registration process. As an internal auditor, you are reviewing the particular vendor registration as part of AR or AP, and you come across a scenario where even 80 pages of KYC document of a particular vendor are found to be generated by artificial intelligence, or those documents have been manipulated by using some kind of technology which even normal automated controls may not detect. So this is the scenario what we are dealing with. Okay, and it could happen from one small employee where by mistake he would have allowed a particular file to be dropped into your system, or has clicked on a particular link. It could be anything. Okay, so this is what we should be worried about, because earlier checklist based was fine, maybe 10-15 years back, when we are not dealing with so much of digital data. But in the current scenario where each of the activity is interconnected, a slightest compromise might actually damage the entire ecosystem. Okay, so checklist only can create a comfort, saying that, okay, I have this benchmark, minimum things, are we being taken care? Okay, just say, okay, today this is my calendar, whether all the things are captured in my calendar. Okay, I'm taking care. But risk doesn't come as per the calendar, or we don't know which event turns out to be an actual incident, is it not? So checklist only will give a comfort, but definitely not a confidence. This is the one point where, as an internal auditors, we have to always keep in mind. Okay, now so this is where we also need to understand with regard to controls. If there is a policy and there is a procedure, then only I can consider that to be a control. Without any of these, then this is as good as no control, because it will go in a haphazard way and there will not be any right mechanism which can identify that. Okay. So this is one point. And speaking about other aspects, okay, we have internal audit standards speaking about the basic principles, the key principles. If you see the key principles, these are directly connected to the GRC. We speak about governance, we speak about risk management, we speak about laws and regulations, that is compliances. These are pretty much interconnected to internal auditor as part of the framework itself. Okay, so that's also one point where we have to be concerned about. Okay, now as I said, these are, as you can see, these are all interlinked. Okay. If there is no policy and we are having a procedure, it's as good as no procedures, because everyone can modify, anyone can do anything. I'll give a simple example from my domain. Let's say if in a company, there is a procurement policy of some computers for various staff and all. Okay, once they procure a particular hardware, of course, they say these are the requirements of the hardware, and based on that, they have procured those laptops and all, and then the particular IT guy will do configuration. Now, assuming that there is no policy which says that any system which has been installed into a particular network should have this kind of desktop policy, which says that it should have the password policy, it should be having a group policy, it should be having some kind of Windows security, or it should be allowing or not allowing the websites, the whitelist, the blacklist. So unless my policy says, how an IT guy will know what kind of configuration? He might be biased, or he might be influenced by the role to whom he is supporting. It could be like a manager, and manager says, you enable chat GPT in my system, and if there is no policy, it's pretty good as no policy. So obviously he'll enable, and that could damage the entire controls. So policy should be clear, wherein I'll say desktop policy, no matter whether it is managing director or even the security guy who is handling the goods received note kind of updates, all should have the common desktop policy. Once I had that common desktop policy, then I create exceptions based on the roles. Okay, so exception is, okay, managing director being the kind of privilege what he have, I'll give exceptions to these particular desktop policies, so that I can have a track of what is the basic benchmark and how the exceptions have been taken care while implementing. So this is what, okay, so there's a policy, there is a procedure in line with the policy, and ultimately the procedures will ensure that the controls, whether it is preventive or directive, have been properly taken care. Okay. So, and second thing, as you can see, I was also mentioning about controls without policy. It's like we are leaving it to the fate. We don't know when what happens, whatever it may be. And moving forward, what we, I mean, of course, when we speak about these controls and all, there is a internal audit as a, we call it as a confidence bridge, because operational reality versus the governance oversight. Okay, so one side of the bridge, if you see, there are these day-to-day operations. There are what you call the business pressures. There are the targets, the incentive constraints. These are the one side of the bridge, because I have to run my business ultimately. But saying so, other side of the bridge, I have the board oversight, the regulatory expectations, the public accountability, the stakeholders trying to have confidence in you. So, as an internal auditor, what I'll do is I'll try to translate the operational behavior into governance insight. I'll ensure that the control performance is converted into, the performance into a risk exposure. I'll try to identify what is the control performance in terms of the risk exposure. And whether the compliance data, whatever I have, let's say, for example, there's a checklist of TDS or a GST or a periodical kind of compliance, whether these are providing the assurance conclusions as an internal auditor. So this is where internal auditor, in the bridge of the expectations versus the oversight, he'll be acting as a bridge while ensuring that these are taken care. Because without any internal audit, it's purely they rely on the management representations or lagging indicators. It's like ad hoc kind of scenario. Usually, when you see non-listed companies or the private limited companies where there is no control mechanism through internal audit or whatever, these are the issues which we come across. Okay. So basically, it gives more of independent judgment. as an internal auditor, because we are giving a reasonable assurance about the controls, about the compliances, about the governance, about the risk controls, what they have deployed. We also identify the early warnings. As an internal auditor, I'll be reviewing any signs of early warnings. I'll also see that whether the controls are meeting with the business objective, the contextual understanding. Okay, and this is what we give a credible assurance. Okay. Now, so GRC systems without any independent becomes assurance like internal auditor. It'll be a self-referential. Okay, nothing like any kind of external confidence it is giving. It's just a self-referential. Okay. So speaking about confidence, as I was also mentioning at the beginning of the session, it is a function of behavior. It's not a documentation. Okay, so it's driven by more behavior than by documentation. Because no, as I said, documentation of policy and all is fine, procedure is fine, but if the same are not implied or implemented through controls, that means there is always a lack of confidence. Okay, so because if it is not controls may be documented very properly, but the confidence, if it erodes, it might erode when it overrides become very routine. Like say in a bank, if I'm performing a review of the daily register, I see that exception ledger has many transactions than the normal. Or in a privileged access, I'm seeing more of exceptionals than the normal. So these are the ones which is eroding the control. So that obviously that will depreciate the confidence. Okay. But as an internal auditor, I also need to look into those aspects beyond what is expected from the documentation, a kind of what you call perception, the so-called skepticism, it is referred in the framework. All these we have to have. Okay. So ultimately, if I have to sum up for this particular slide, what we have, the strengthening governance or risk or compliance. This is the manner which enables the shareholders to rely on the organization with confidence, and that has to be done by the internal audit through his procedures. So control tells what exists, and internal audit tells that what can be trusted, and the trust is what we all call it as a confidence. Okay, so this point you can make a note of. Going forward, yeah, I'll come back to this white back testing and all. I mean, see, yeah, maybe I'll continue. So white box testing, black box testing. Why I say this, as an internal auditor, I'll say, like in Google, if someone is using Google or randomly any kind of, they say surprise me. They want to learn something new. Okay, so they say surprise me. It throws up with some kind of unknown factor, unknown act, which is not captured by the model or the Google search. So I'm trying to learn something new which I don't know or which I never experienced. Okay, so that's what the black box is. So usually most of the internal audits what we follow is of a white box approach, wherein I have this checklist. I say these are the things which have to be reviewed, and I entrust this to the team saying that no, you follow this particular checklist with regard to the compliances or control gaps analysis kind of thing. And when there is a rule, I always say this, when there is a rule, there is always a place for breach. Okay, because I know that if these are the scrutiny norms for income tax, I'll try to work around saying that my transaction does not fall into these scrutiny norms. Or if I know that by following these particular steps, I might be coming into the system, I'll try to find out the way I'll not comply with these steps. I'll try to find out an alternative. So when there is a rule, there is always a possibility of breach. Okay, so that is where the approach should be something like black box kind of thing. So what happens in terms of a regular internal audit traditionally is we do walkthrough, and we examine controls, we review SOPs. Sometimes couple of processes will have this interview with the process owners. Okay, but the modern organizations, what we speak about, which are transaction heavy, like all transactions coming into GST purview or DPDPA as well. Okay, which is more of data driven or highly automated. So here I can't go with regular white box kind of testing, wherein I'll say these are the checklist and whether it is designed, whether the control is implemented. Okay, so that is a traditional system which it could support. But when it comes to the black box mechanism, wherein I'll be focusing more on what has gone into the process, the input, and what is the output. Okay, I'll not look into the internal mechanisms, okay, or internal mechanics, saying that no, because I'll try to see the input and the output. I'll try to compare and say, if this is the process, what outcomes are being produced, or the results are consistent with the policy and risk appetite. Where do exceptions cluster? What patterns ever emerge over time? Okay, so these are the things what we test as a black box. So you can speak about data analytics. Okay, speaking about data analytics, I thought I can refer to this particular beautiful publications of our institute called Continuous Control Monitoring and Data Analytics, published in 2022. It has got very good techniques in performing continuous monitoring and also data analytics. Okay, you can search for continuous control monitoring and data analytics, which can be very good handy tool reference for internal audits especially. So because in a typical black box testing, we do data analytics, we do trend analysis, we do exception pattern identification, we do outlier detection, we do ratio and behavior analysis. And nowadays, including in bank audits, we started doing something called sentiment analysis. Okay, so what is sentiment analysis? In the given scenario, for the given type of activity, this is the inflow, this is the outflow. And if there is a slight change in the mode of the business, or it could be even procurement, whatever it may be, what the change in the sentiment or sentiment could be with regard to a particular department, saying that, okay, for a particular department, considering the various procurements during the last 36 months and the inflow and outflow, so usually there will be a particular what you call expectations out of this. There is a pattern of sentiment. So even if it's a slight change in the sentiment analysis, what kind of spikes I'm seeing? Okay, so this is what, thanks to again AI tools which you can use to perform sentiment analysis. Because many times we do ratio analysis, we do trend line analysis, and all. These are all pretty much rule based. And when it is a rule, as I was mentioning, we can't actually go beyond what exactly was the intention behind that. Because no, if there is an intent, they might very much see that everything is in proper place. But if you go for something beyond the rules, sentiment analysis and all, that's where you'll see something which may not be reflecting in the numbers. Okay, so it's like I may not fully understand the process yet, but I can see what it is trying to produce. Okay, that kind of aspect we'll do in this particular thing. Okay, so I'll what I'll do is I'll break this flow of speaking out and all. Let me show one particular tool. I'll come back to the slides anyway. Let me show one particular tool and then try to connect with that particular tool through demonstration. Okay, so as I said again, thanks to the technology what we are having for the last 3.5 years or so, which is helping out perform various trend analysis in a just a split of a minute kind of thing, or it is trying to give me various pattern analysis which otherwise were never part of my white box testing. Okay, so the so-called artificial intelligence or the machine learning has been helping us in a various forms. Okay, so one such tool, just for the sake of demonstration again, what we can make use, I'm going to show while connecting with the respective GRC aspects. Okay, so just give me a second. Meanwhile, any doubts and all what you have, can put it in the chat box or whatever possible mode you have, so that we can take up at the end. Yeah. Yeah. So this is what I call uh, saying that a successful day in the life of an internal auditor. Of course, why I call it as a successful day? A successful day of internal auditor is as good as I'm strengthening the GRCs. Because as an internal auditor, if I keep my basic principles, if I keep my key principles intact with a proper intent and quality, that itself will be strengthening the GRC, and that is what my successful day is called in internal audit. So yes, as I said, this is just a pilot tool, which probably it doesn't have to be of this much caliber and this much capability. You can still come up with a small kind of validation tools, because Unfortunately, when it comes to barring a couple of companies, big companies and big firms or whatever it may be, there's pretty much hardly any change in the mechanism what internal audit follows. I, in fact, witnessed wherein internal audit hardly speaks about the compliances like TDS, cash payments more than 10,000, non-compliances with income tax angle, non-compliances from the GST perspective, or at the most the ESI, PF kind of. So it's become like a kind of regular checklist wherein it's not doing any value addition. Moreover, it is creating a lot of risk into the governance aspect, because I don't give that kind of value addition through my feedback. Obviously, it is going to hit back the organization in a different way. So especially this, it can be effective GRC, as I was mentioning, can be strengthened to a proper internal audit assurance, which obviously creates the confidence to the stakeholders. This is what I was speaking so far in terms of the controls giving the confidence. Okay. So what this tool gives me is, as I said, I should be in a position, hope the screen is visible. Someone can confirm how the screen is visible? Hello?
Yes, sir. The screen is visible.
Yeah, fine. You are able to see the GRC, IA-GRC assurance framework, I think. Yeah, fine. Okay, so yeah, so as I said, of course, this is just a specified area of GRC what I'm trying to address. You can think of depending on the scope what you're assigned with in various forms. Okay, so first of all, having a dashboard. Okay, for what I'll be looking as an internal auditor is considering the resource constraints what I have in terms of staff. Okay, you might say internal audit and staff. Yes, internal audit is not about single person doing single-handedly. Internal auditor, though you call it as a singular kind of thing, it's a job of multiple people as a team. Okay, there is an internal audit department which has to handle this particular entire task. It's not that one person reviews and gives his opinion through a particular report. It's a teamwork. Wherein it is a teamwork, there are again resources, allocation, the roles, the responsibilities, the daily tasks, review, maker, checker, every aspect will come into play. Okay, so it's a collective job. Internal audit is a collective job wherein you have to have a coordinated effort in performing the respective assurance functions. Now, assuming that I'm having these various checklists with regard to the governance. When I say governance, what are the policies approved by the board, which are communicated as part of your scope design? Because no, Companies Act also speaks about designing the internal audit scope in concurrence with the internal auditor to see that the best of the output has been achieved. Okay, so there you are being part of that. So when there is a scope, they speak about the policies and what are the limitations, what are the out of scope, all those you have. Then you are trying to connect with the respective SOPs, department wise, role wise, all those things. And so every periodically, maybe like say, for example, if I'm speaking about IT policy, the requirement of the respective industry norms like BFSI might say that you have to have version management, you have to revisit it once in a year, and all those things. Okay, so there's this policy, there are procedures in line with each of the policy. Okay, and then the procedures have been implemented through various aspects, could be automated, could be manual, and there is a review mechanism designed by the management. What you'll do is you see the policy, you see the procedure, you see the design, you test that implementation. When I say test, you're trying to see, could be interview, walkthrough, whatever it may be, and ensure that whatever it started with the policy have gone into the ground level and properly has been taken care. Okay, so this is what will be as an internal auditor. Of course, this is of course broad kind of scope. You have your various stages involved within that. So for each of that activity, what I do, what kind of confidence score I have, if I speak about compliances, what kind of score I have. So these are the 10 compliances, what has to be complied in this particular month, in this particular week, in this particular day. Okay, and then whether I'm able to track it through automation because you speak about the expiry dates, due dates kind of thing. Okay, so that's the dashboard. Then I'll show you this what exactly this internal auditor diary. Okay, wherein it will show the quality health score, because internal audit framework, if you see the 600 series, we have this quality standard also, wherein it ensures that you have to review, you have to be get that particular audit procedure reviewed by some expert if required, or you yourself can do. So ultimately various aspects. So this particular diary will show me the quality of my compliances as an internal auditor. That means testing my procedures are in line with the expected in line with the audit planning what I've done. So speaking about, I will also display the number of rules. I almost have 100 rules to be considered, like various acts, various aspects. I was just speaking to my partner Premna sir, saying that in particular construction, in a particular area, we're assuming that you have come across a small mountain rock, and if someone tries to break that rock to see that the land is leveled, and by chance, if someone complains to the respective department, mines department, mining department, whatever it may, that itself could be considered as a crime. Okay, so unknowingly, you have given this outsource to some labor contractor. He is doing this, and unknowingly, that guy has tried to break a particular rock mountain which has come in between the land, and you have not taken the sufficient permissions. It could straight go to an extent that the construction itself might be stopped. Okay, so this is what I said. I mean, have you ever listed all these things? Probably you might have said that, okay, I'm taking the land conversion permission, I'm taking the municipal permission, I'm taking the roads and building permission, but there might be something which you may not plan about. So that's where the internal auditor also comes into the picture, saying that, okay, for a given scenario, what are all the possible compliances? What are the risks if in case I'm unable to adjust my procedure in that? Okay. So these are the various critical risks I'll display. So as you can see, my dashboard is pretty much listing down the top risk indicators. Top risk indicators which might impact my business objective, which might directly bring my management into penal provision, some risk on the governance aspect, or any kind of those what you call triggers which might influence my business objective, like related party transactions, you call it, depending on the industry, of course. BFSI has its own, manufacturing might have its own, FMCG might have its own, or even startups might have its own. So I need to list down all the risk indicators, out of which in the given particular time, considering the timelines, what is the top priority I have to give? Okay, so these top risk indicators, as I said, I'm speaking about a day, a calendar day of internal auditor. So okay, in a day, this is what, for this particular day, these are the top risk indicators for me, and I have to concentrate on this day. Of course, you'll not do daily kind of activity. I'm saying your calendar should be designed in a way that it has to split into multiple milestones, into respective weeks, months, weeks, calendar days, and then see that out of those, in a given particular day, what are the top I have to concentrate by the end of the day, how I ensure that all that rules have been complied with. And of course, compliance deadlines, this is pretty much regular activity what we do. Yeah, one of the activity what we do in terms of compliance deadlines. Okay, so yeah, kindly watch on the DPDPA. It's going to change the face of the what you call economy. It is going to change the culture of any audit. Could be not only internal audit, statutory audit, any auditor, any audit firm. It is going to change. It's going to make a cultural shift in a way we do. And positive thing is, why I say cultural shift is, as part of our framework of ICI, following the ethics, following the SQC and all, pretty much close to what DPDP expects, except that many firms may not be following in a way it has to be followed, except for the peer-reviewed firms and all. Now, this particular act is going to put that responsibility, because it is going to get into the systems, it is going to get into each of the individual data what you are dealing with. Could be an SSC, could be staff of an SSC, could be vendor of an SSC, could be data of an SSC. So to that minute level, if it is entering into the system, unless you have a proper mechanism which is properly controlled, ensuring that the safeguarding of information and all is there, it is always going to be a major risk because the penalties are too high. Okay, so that's where I say a cultural shift in the sense that it's going to make us a better chartered accountants. If I was not so till this point of time, this act is going to make me a better chartered accountant because it's going to get me more close to the SQCs, more close to ethics, and also ensuring that I comply with the respective act anyway. And yeah, these are the indicators because when I say stakeholders, it's not just the management which has appointed me. It includes the regulators, it includes the external auditors, investors, lenders, of course, staff I may not consider. But if in case I'm dealing with some industry like hospitality management or a manpower supply, I might also have a separate dashboard speaking about those manpower as or employees also. So I need to have, as such, as I said, with regard to the GRC, with regard to governance for each of that, how do you say again come back to this adequate? As I mentioned earlier, also the controls, identification of controls, the policies to ensure that the controls are any risk to those controls are prevented or detected, and the procedures, and of course implementation. So each of the particular task what I've identified have been addressed adequately when it comes to the board responsibilities, similar to the senior management, similar to the regulators. Okay. So this dashboard in a particular day when I come to the office to check on the status as on yesterday, this should give me a proper idea about what immediate attention I have to give and how I have to revisit if any of those rules if I have to do. Okay. So this is the ultimate dashboard, of course, going back into each of the aspects. So let's start with assurance rules. So as I said, I've drafted 100 rules. I feel this is still much less than what is required. Okay, because if an external auditor can be held responsible for not reporting NOCLAR or for not complying with certain statutes, which puts that responsibility to identify, note, and report it. If that kind of responsibility is there on external auditor, you can think what being an internal auditor who gives a reasonable assurance on the management functions, on the entire operations of the organization, what kind of rules I should be complying with. Okay, so 100 will be also still short of what is required, but still at least some kind of benchmarking or somewhere I'm starting, and slowly as I go, I try to improvise my rules in a way that it will adopt as the technology changes or as the requirements grow. Okay, so here let's say for example, uh, let's assume that I'm dealing with a BFSI entity or any banking kind of company. So there, the rule will be speaking about your Basel III framework, and depending on Tier 1, Tier 2, Tier 3, it speaks about the norms, master directions, circulars, all those aspects. So there, my expectation, my focus on the particular industry will be different. Rule one, if I say, this rule may not be there if I'm dealing with a manufacturing entity or if I'm dealing with some service, IT service entity. So I have to custom my rules in a way that, first of all, whatever core business objectives are there, those are being dealt with. Then any additional which are non-core business but have indirect impact on the business, those will be the second rules. And the third rules, as I said, is something like may not be exactly zero-day threat kind of thing, but yes, some unexpected or the kind of possible scenarios what I have, those kind of additional rules, so-called black box rules. So this is where I'll try to list down the respective rules and try to check whether the respective controls are there. If I go to this particular thing, it says that internal auditor must assess adequacy of capital buffers, stress testing procedures in terms of the assets what the bank has, and the regulatory capital computation methodologies. Okay, because Basel III aspect. Now, if you have to comply with these, what are the controls I need to check? Okay, so one rule I'm speaking about. Let's see what are the controls. So when we speak about the financial controls, okay, again, I've identified the control ID, which of course, if management is following a properly designed ERP kind of what you call risk control matrix or ERP kind of control adoption or go those kind of techniques, yes, they'll have these respective control IDs, RCM IDs, okay, all those things. But yes, if they don't have also, as part of my internal audit strategy, I need to mark the respective controls, give a particular numbering so that that's how I keep a track. Okay, for a given control, I don't have to again go back to the policy, go back to the whatever is being drafted in the policy. Merely by looking at the control ID, I should be able to identify whether what is the what is the what you call rating, risk rating of this particular control activity, and if it is not complied with, what is the impact on the like I mean threat, what is the impact on the organization, whether it is high, medium, low kind of thing. Okay, so say if I speak about financial control, segregation of duties in case of payment processing. As I said, I'm trying to pick up those areas where I've tried to address for a BFSA entity dealing with the Basel III kind of norms. So whether the particular control has addressed the risk. Now control is designed by the management. So what as an internal auditor, control is there fine, but is that control addressing the risk? Okay, this is also a scope wherein because ultimately that's what the governance is about. It's not about whether the governance is there, whether it is addressing in the right point or right way. That is also to be tested by the internal auditor. So whether the risk address, that is any kind of fraud possibility, unauthorized transactions, and what is the frequency of the particular control testing. Of course, by the management is one aspect, and you as part of your sampling techniques or whatever it may be, what is the frequency you're applying. Okay, so of course this is just saying that no, I keep checking this particular dashboard that will be directly impacting my dashboard, which will keep updating the heat map of my dashboard saying what is the percentage of compliances for this particular industry, whatever it may be. So going back, that is one. Okay. Now, once I've seen the controls, I need to check the compliance status for this particular entity. What are the respective compliances? Okay, I've just listed down only one. Okay, if I remove, as I said, there could be many compliances depending on the type of industry I am doing. As I said, this is just a pilot what I prepared for the sake of presentation. Yeah, I can have under again each of the regulator. If I'm dealing with NBFC, non-deposit taking, systematically important, all those things, various categories. So for each, again, housing kind of entity, cooperative banks. So there are multiple entities. Like if I speak about SEBI, again, whether it is falling under BSE, NSE, commodities. So I need to identify under regulator what are the subsets and what are the compliances, and that's where I make a list of that, which will be directly linked to the respective regulations. Okay, so what could be the typical or the possible non-compliances? If in case the respective regulatory capital computation methodologies are not followed as per Basel III framework, what is the impact of that is going to be on my non-compliances? Okay, so obviously that is breaching the capital adequacy. And of course, AML violations, as I said, KYC norms, if not properly complied with, we have seen good number of cases, including Paytm and all, where large penalties to an extent of 5 crores have been imposed merely for not complying with the basic norms like KYC and all. So these are all coming under your AML violations. So then what could be the impact on that? Whether it could be prosecution of the or the penalty or even the suspension or the cancellation of the license. That means directly impacting the going concern itself of the entity. Depending on that, I'll be rating between critical, high, very high, high, medium, low, and all. Okay, and it is linked to my assurance, internal audit assurance rules. Okay, so that's how I'm getting from that particular rule one itself. And yes, escalation required. Yep, obviously you have to escalate it to audit committee, because that's how audit committee in turn will communicate to the risk management committee or legal committee, various committees and all. Because yeah, one more point, kindly please restrain from reporting any of the identifications what you do to other committees other than audit committee independently or directly, either orally or whatever way. Okay, that will create lot many legal litigations. So ensure that the communication has to be through audit committee only. Yeah, you might probably design your reporting in a way that will facilitate the audit committee to share this information to the other committees as is kind of thing. Okay, you can probably segregate or categorize the comments in a way that will facilitate the audit committee to communicate to the other committees and all. But yes, always restrain from making any such direct communication with the other committees, because we will be internal auditors will be communicating to the audit committee directly, not to any other this thing. So yeah, it also creates some other business related issues also if you try to do, because there will be many interested parties in that. So that's one. So likewise, I've just addressed one particular rule. You can speak about, like, say, as I said, 100 rules, anti-money laundering control effectiveness. As I said, KYC. KYC, if it is especially a banking kind of activity or an insurance kind of activity, what kind of impact? Okay, we have come across good number of cases in the insurance sector also, where a slightest breach of financial health records of the insurer has led to very serious issues, to an extent that there was sedation factors involved, some kind of other countries' involvement was there to get no details of health. So I'm saying, just to give a reference kind of thing. So depending on the industry, the same rule, the impact, the effect might be changing. It might be critical in one industry, may not be so. So that is the judgment what you as an internal auditor have to test. The judgment made by the committee governance or made by the management. Okay, if say that, okay, this is under the risk register, this is the threat what we identified, and considering the various possibility likelihood of that, this is the impact. So because this impact is low on my financial, I'll say low. But we should not only look into the cost factor or the what you call the impact from the monetary perspective. Is there any which might damage the reputation, or is there any factor which might give some kind of threat indications to the entire society or a country? So these are the perceptions what you should be carrying beyond the financial, non-financial kind of thing. So there I might rate it as a critical, though management has rated it as a medium or high kind of thing, I might consider it to be critical. So these kind of gaps of judgment also to be taken care by the internal auditor by virtue of his experience, whatever he has. Okay, I believe internal auditor one should be is a person who should be like a lethal kind of thing. Okay, samurai kind of thing, where he should be prepared with not just the known factors, the unknown factors. Should be very reactive to any kind of scenario. So that's how such a dynamic kind of role what it expects with. Okay, and that too you are doing this as a day in day out activity. Then speaking about, of course, there is a credit risk assessment again based on the bank. Okay, so what I done is considering the weightage of the industry, because you see most if you list down the BFSI, the information technology, the manufacturing entities, the startups. Okay, there is a particular hierarchy of the way they give weightage to the internal auditor. BFSI more so, because they require constant monitoring, more sensitive, more large kind of data they deal with, more transactions they deal with. So there the focus of internal audit is more. Okay, and then next might be the manufacturing entities, wherein there's a lot of stake involved in it, and directly connected to your GDP, so whatever you call. So once I go down, maybe a startup may not have that kind of expectation or that kind of role of an internal auditor for a startup, because for a reason, it's just in the initial stages. From an idea, it is trying to convert into a business opportunity. So there they might require a more consulting kind of thing than get some kind of insurance. So there I've listed down the rules in a way that the hierarchy of the weightage of internal audit is there in the respective industries. And as we go down, it is moving to the next industry. So stop being the BFSI where most of the internal audit expectations are the concentration is there. Market and treasury control. So what kind of controls these particular things have? Okay, so I'll just go down to the compliance status. Of course, this is again coming back to the RBI. Okay, so it's as I said, this is just a pilot. Let me see if we can develop, me and Premna sir, if we can develop this into a proper tool and probably share it with the IASB or ICI for the benefit of members. Let's see what best we can do. As I said, this is an indicative list. You can just probably customize more depending on the role. Operational risk insurance writing. Again, another sector of BFSI. It has its own controls to be tested. Operational controls. Okay, in terms of being an insurance kind of thing. So just to throw the kind of risk, investment portfolio compliance, related party scrutiny. This is common across, irrespective of it is a bank or, of course, not so in bank, manufacturing or services or trading. The compliances in terms of LODRs, the regulation, the 23 or section 30, rule 30, whatever it may be, international financial controlling, and fraud risk management, customer due diligence, liquidity, interest rate ratio, outsourcing risk, regulatory reporting, outsourcing risk. Again, 2023, RBI has a master direction that has its own implications to be considered as part of my risk register. Regulatory classification. Okay, then comes your cyber security, and this is one area which I believe internal auditors have to some or other way equip with, because we don't have any such organization which doesn't use any information or data not in a digital form, non-digital form. Everything is in digital form. Okay, when you are having this kind of information being captured in digital form, even if you see the tone of the government or the tone of Ministry of Information Technology, Electronics and Information Technology, Satin has advised even MSMEs to have a proper cybersecurity framework. And we are speaking about 6 lakh plus MSMEs. So that means even the micro, small industries, medium industries are also need to consider, because as I said, we deal with all digital data, okay, whether it is vendor data or whatever it may be, including your GST compliances and all. When you deal with the digital data, when you are depending on more of information handling through various resources like internet or whatever it may be, there are a lot many controls expected, and that's where these frameworks speak about. So it's not no more that cyber security is for only BFSI and all. No, it could be even for a small entity, a startup kind of thing, where the IP content which has been used by the startup to come up with the production might be breached and might impact the direct going concern of the company itself. Okay, so there is only one single laptop of the managing director who has this startup idea. He's trying to convert that into a proper thing. He registered a company. He started with 2-3 employees, and he says that, okay, mine is only one system, a single router, or probably I'm using mobile spot. So there, I might say that, okay, I don't require cyber security framework. No, a slightest breach might impact the going concern, because the IP content based on which he's trying to come up with the production might be breached and might be leaked as is. Okay, so that is one area what as an internal auditor we should be focusing on. DPDPA itself is a separate area. It's going to keep you so busy that I don't want to give any kind of numbers and all, but yes, it's going to make next 1-2 years life miserable for any auditor, no matter what, external, internal, because so the kind of transactions what we are going to deal with when it comes to personal data, including our CA forms, if in case you are into practice, including our CA forms where we have the articles, assistants, the income tax assessees, the clients, there's a lot of personal data involved. Okay, and personal data doesn't have to be any name or PAN number or the GST number. There are many, there are roughly around 30 plus identifications which will considered to be personal data. So I need to ensure that all this has been taken care of. If I'm speaking about this as at a firm level, you can imagine the company to whom you are providing services as an internal auditor, the kind of impact what it will have. the kind of preparedness they have to be. Okay. And yes, you are going to play a very important role while performing the internal impact assessment and gap analysis. Okay. So information security management, access control, and these are all forming part of your cyber security, vendor and cost management. So you can see, if I can come up with, I mean, slightest of, as you can see, many of them are classified as high because they are directly impacting the business objectives more than anything. Okay. So if I can have these rules as an internal auditor, I just need to mark down, map that, whether that is match controls are there, whether the compliance is. Like if I go to compliance cockpit earlier, which I have seen. Okay, so these kind of sample, of course, I presented. You can keep adding that, checking whether it requires a continuous monitoring or it's one-time testing what you do, or whatever it may be. Okay, periodical testing, whatever it may be. So this gives a kind of confidence as an internal auditor. That's what now, if you see the team controls to confidence. Okay, so how I'm going to automate my review mechanism, how I'm going to develop my audit procedure strategy in a way that the control review gives me such kind of confidence both for me and also the stakeholders, because stakeholder confidence is what will testify the controls. So this is one such way what we can do. Then comes your risk control matrix, very very important, wherein again, as I said, this will vary depending on the entity what you are dealing with, the kind of controls what they have, and if it is cross border or multi-geography located, multi-people dependent. Okay, and what you call the exposure increases, the kind of controls also keeps adding. Okay, one example, if I say, like in a manufacturing entity, they might be dealing with the dealers or dealers located across different parts of the country, and they are trying to access the database of the company for placing order. Okay, which are again installed in their respective systems. That system, being a dealer, obviously he'll not be taking putting orders only to this company. He might be placing orders to multiple companies. Now, in such scenario, what is the responsibility of this company? I mean, to what extent the company can feel safe with regard to that common system what he is using while placing orders to multiple company? Is it that my safeguarding measures itself will be sufficient, or do you have to improvise some kind of monitoring mechanism at the dealer level, which obviously he'll not agree with? But how do you deal with, whether you're going with VPNs or you're going with some kind of leased lines access system? So these are all the operational issues comes into the play. Okay, of course, management will decide, but we as an internal auditor has to check whether that is matching with the expectations or the objective kind of thing. Technology controls. Okay, all these are sample. Okay, you can just keep on adding, and as I said, these automation will only create more what you call clarity in what we are doing, more than convenience. Okay, we don't use technology for the sake of convenience. Kindly please understand this. Technology is not used for the sake of convenience, not to substitute you for the activities what you are doing. And if it only can be used as a substantiate whatever you're doing, or what you call some kind of substaff activity, you're, instead of using some resource person to do accuracy check, you're using this technology to do that in addition to whatever you're doing. Okay, so if only you look into the technology in that part, it will be helping. If in any case you are saying that AI is going to help me in terms of drafting or decision making, then definitely you're not only creating risk to yourself, you're creating risk to the entire organization as well. Okay, so kindly, whenever you are using any kind of technology, ensure that it is only improving the quality and helping you to better your quality rather than trying to give some kind of comfort. Okay, and then of course the strategic controls in terms of the organization management kind of thing. Okay. So once I have this, obviously I'll identify for each of that the effectiveness. So here, when I say about effectiveness, you need to understand, like, we have this audit universe. We need to define the audit universe. When I take up an internal audit, to see that what are all forming part of this, what are the departments, what are the resources, which are the entities falling into this particular universe. Because unless I scope that audit universe, I will not come up with an audit planning saying that what to be dealt to within that particular audit universe. So you have internal audit standards under 100 series, which speaks about various audits universe and how you to deal with and how you can define that and all that stuff. Okay. So effectiveness will be depending on the charter, that is your universe, what you verify, or what kind of assurance, what you are covering ultimately. And then this is where you have a checklist. So for example, if I say with regard to governance, okay, you have governance and various checklists with regard to the risk factors and all. So does IA have unfettered access to the audit committee? Yes, no, partial. Okay. Is the risk-based audit plan aligned with organizational risk appetite? Okay, this risk appetite again has to come at the time of risk register updation only. Does IA provide assurance on the effective controls or your audit findings tracked to closure? So this is just an indicative list, what I mentioned in terms of assessment area, which will decide the IA governance, internal audit governance quality. Okay, so as you can see, if it is strong, you can mark it as yes. If it is moderate, then you say partial, weak, and not applicable. So this will give, with regard to this, which particular controls it is addressing. Ultimately, that mapping you have done. Okay, so earlier you have mapped the rules with the compliance cockpit and the risk control matrix, and now your audit effectiveness is also mapped to that particular action what you have listed, and that's where you can see if it is strong, then the control effectiveness is strong, and that's where your dashboard will consider the confidence level. Okay, so these are all interlinked. Okay, so IA process adequate, all those things. Of course, these are all like if in case I'm entrusting this updation to any of the staff or a junior, he also need to get trained on the various ethical aspects, how to deal with and all. So a couple of COSO related from ERM, or it could be any other best practices what industry follows. I'll try to map that. I'll try to mark that into my tool. Okay, and as I said, the communication is one more important area what as an internal auditor, because communication in the regular perspective is like the how fancy your PPT is, or how beautiful the designing of your internal audit report is. That's what practically, sorry to say, but yes, honestly, that's what the uh, activity is going on. It's not about how beautifully or how easily you are trying to present it. It's about trying to meet with the expectations as an internal auditor, as a scope what you address, and whether you are able to communicate that to the audit committee in a way that they can understand, they can probably identify any issues so that they can put the controls. Okay, so it has to be very clear, as we say in cybersecurity also, the any identification has to be in a business language where the people, business people should have, can be able to understand. I should not say that CV score of 8 and the CVSS score of 8 is classified as high. I need to make them understand why this particular scoring, what is the impact of that on the business objective, what is the impact on the production activity, and then I try to say because this is the impact and this is what directly impacting my business, and that's how I classified as high. Okay, similarly in our audit comments also, it should not be merely like presenting in a fancy way. The communication has to be proper, and this is one of the best practices what we have to list out. Now, finally, coming to the most important about the diary. Okay, so case studies I've listed down. Of course, these are all learnings. Good number of publications now available in terms of the control lapses. What internal audit. When of course of publications are there. Even our internal audit ISB now and then has released a couple of publications in terms of what are the learnings we have. For example, in terms of ILFS, the recent one, which happened prior to COVID. So here, if you see, what is the learning we have? I'm assess the interconnected group structures, audit independence, challenge management assessments on liquidity. Okay, and of course the early warnings. So this part, maybe once I learn something, of course, these are all fundamentals anyway. It's not that these are new; these are fundamentals which are missed out. But yes, once it has had come into this kind of magnitude, I need to be very careful saying that to what extent I'm covering this? What is the key learning I have? As I said, one example I was mentioning about trying to remove the mountain rock which has come in the land leveling, or and one more case study which has happened recently in my region, Hyderabad, wherein a particular school was being used by a pharma company, of course CSR activity, in the same where they are manufacturing some illegal drugs. So which is a governance failure, obviously. So what, as an internal auditor, assuming that if that is a listed company, what kind of checklist would have helped me identify those lapses? Okay, what is that skepticism which I could have brought in, or what kind of doubt scenario I can bring in, saying that, okay, this is the movement happening from that particular place, wherein the manufacturing products are moving from so and so place, wherein my location says that that is a school or what. I'm just giving an example. Okay, so you need to be open in terms of making out learning on your own, apart from these cases, whatever now and then comes across. Yes Bank, DHLF, Cape Coffee Day, of course, considered to be a promoter kind of what you call counter misconduct. Bharat Pay, Byju's. Okay, these are all few I've listed. Of course, main, of course, PhonePe, Paytm is one. Learning for the banking, the digital lending apps, so-called digital lending apps. So these are all many things which probably, as an internal auditor, if I can concentrate more onto the risk factors and also the governance factor, maybe I could have identified them early stage rather than look at the outcome. Okay, and of course, these are all non-listed company scenarios, but yes, this might happen in the listed entities also, especially coming from certain parts of country where it's a listed company, but the structure is a listed company, but it's control driven by single family or single person kind of thing. So there, you might have, even for listed company, these kind of issues will come up. Okay. Rigorous RPT techniques. Of course, this is a data breach with regard to cybersecurity. Okay, so these, as I said, why I'm displaying this is, yes, in your dashboard, when you speak about the controls, you need to have a regular updates of the case scenarios, whatever has come across, and also the training part, what we impart to the audit staff, internal audit staff, has to be in line with these learnings what we have. Okay, because they are the people who are going to implement the review mechanism at the ground. So most cases, red flags existed before failure became public. So IA must design procedures to identify early warning signals. This is one learning. And non-listed, of course, this is similar kind of thing. At the top. Okay, so I would refer, I'm not sure whether I can take the company name, but it's a topmost software company, listed company from India, which has a very good culture of ethical and compliance training, because they have a separate department, hugely funded, ethics and compliance committee, where they have this periodical events conducted to develop that cultural, the kind of ethical culture, like inviting families or creating those kind of awareness, which obviously, as I said, no, ethics is something, if you can build into the culture, then even if the controls are not so effective, still it should take care, because no one is trying to do something no beyond something wrong kind of thing. And yes, coming to the IA diary, internal audit diary. How many of you have this practice of maintaining diary? Diary in the sense, it's not that today I have a meet with so-and-so committee, or no. It's about your audit procedures, right? Starts from your audit planning, okay, including defining your audit universe till the reporting part. And then again, monitoring part also. Okay, so for example, if I consider to split the entire 7 stages, first thing is identifying the audit universe. So this is also there, as I said, in 100 series, internal audit standards, pretty much detailed covered about. So if I can list down, a particular entity, if I have to consider the audit universe and risk framework, what is the complete inventory? inventory of units, business processes, all these entities. Okay, so whether I could identify that thing. If so, whether all the complete list of all identified and documented. So as you can see, if I keep testing that, which is connected to the respective internal audit standards on internal audit. Okay, and that means what I'm doing is I'm documenting my procedure. I'm also ensuring that the compliances are automated. And this I'm doing for each and every entity which I'm performing these services. If I'm doing this internal audit function as a consultant, okay, so for each of the entity, I have the comfort of doing this. Okay, so business processes mapped, all illegal and all legal entities and subsidiaries included in the universe. Okay, because the definition of association, associated company, subsidiary, and all that stuff, especially associated company, what company secretary has considered, if you need to validate that anyway with your own knowledge, and also see that whether all those have been considered as part of the legal entities. Some LLP being controlled by an associate company might again attract as part of your legal entity. So that's where again. So each of that, when you comply with, when you keep marking that, as you can see, as I keep marking, there are out of 110 within audit universe, I have around 7. So let's say I've complied with this geographical location, third-party relations, IT systems, and application inventory. Now that means my audit diary, out of total 110, 7 have been completed. So it is showing the completion rate. So these, and also within this audit universe, what is the percentage I've covered? And then risk categorization. Okay, each unit classified as high, medium, low risk, depending on the impact and the what you call the role of that particular unit in the business process, including the meeting the objectives or whatever you call. Okay, and then most importantly, are we just doing it as a one-time activity at the time of initial engagement, or are we having this process of annually revisiting this audit universe and updating the log? Okay, it's a continuous process, just like your statutory auditor has this acceptance and continuation procedure, which has to be done regularly. Similarly, for internal audit also, I need to keep monitoring any changes or whatever it may be. So as I keep updating each of these diaries, my audit diary will keep tracking about to what extent. So I speak about audit universe, then the risk registers. First of all, has the entity has provided for the risk registers? If so, has it listed all the unique, all the risk identified with the unique IDs? What is the impact? Obviously, in the risk register, I need to identify the threat. I need to identify the vulnerability, the likelihood of that being converted into a threat, and what is the impact of that in terms of monetary, in terms of non-financial aspects. Accordingly, I'll give the risk rating, and I'll identify who is the risk owner. That is, for example, if it is a production, I might consider the supervisor in charge of that particular production as a risk owner. So, what is that the responsibility I put onto that risk owner? So, all that I'm considering at part of my risk register, the process level risk registers, enterprise level, okay, and of course, these emerging technologies in terms of what kind of additional threats I might come across due to this emerging technology, like especially if I'm using IoTs as part of my production activity. Okay, IoT has to deal with its own kind of risk register. I mean, the kind of activity when it comes to risk register, or I might deal with a cloud service provider, wherein I might be taking only as a platform as a service. So there, I have a different kind of thing. So I just need to identify each of that process-based risk registers kind of thing. So this is about risk register. Then once you have identified, what is your audit planning? When it comes to annual audit planning, assignment level, where you have a team where you are engaging for each of that. Okay. Then your resources, to whom you are involving with. What is the what you call combination of your resources in terms of experience or whatever it may be. As you see, I also included the most important training aspect, because you see, one of the important aspect even in our SQC for statutory auditors or external auditors, even otherwise, of course, internal auditors and all. SQC has this very important aspect of training the staff and CPED kind of activity, continuous professional education development activity and all. So each of that with regard to audit sources, what kind of evidences I've captured, whether all the working papers have been created, repository, properly numbered, control testing, including external, what you call external confirmations, control testing, finding register. Okay, and more importantly, maker checker. As I said, this is not a single person driven activity. Internal audit is not like I do on my own. It has to be a proper teamwork, including the engagement, the quality has to be reviewed. Self-review is there one, of course, but apart from that, if required, there is an external review has to be conducted. Now here, whether I'm having that kind of maker checker controls as part of my internal audit, and then I'm trying to identify those whether they have been taken care, and then maker checker controls, of course, maker and then reporting. I said reporting comes with again monitoring as well, follow up, action taken record, action taken register, all those things. Okay, so here, once you have this internal audit diary updated, okay, wherein your dashboard also speaks about what is your quality health score. So one monitoring I'm doing on the GRC confidence score, that is the compliances of the organization from the governance risk compliances perspective, and my quality, because ultimately if this is not good, obviously I can't give assurance on this. My internal quality itself is weak. How I can give a quality assurance to the external, like GRC and all. So this dashboard will give me a self-evaluation kind of thing. What's my position, and then a combination of these will give me that kind of confidence. What I was speaking earlier. Okay, in the theme, if you see, it's about strengthening the GRC, where the controls to the confidence, the journey of controls to the confidence. Controls are from the one side of the bridge, the management and all, but the confidence is about the other side of the bridge, that is the stakeholders, the regulators and all. And if only this confidence is strong, which will reflect that the controls are good enough, and this particular kind of tools or whatever activity what an internal auditor can create for himself will bridge that gap to build up the quality. Okay, so let me just go to PowerPoint. I believe nothing much. Yeah, it's just again the framework which I've shown you in terms of how you can make the assessment of the framework. Just now I've demonstrated the particular website, what kind of confidence I'll get for the GRC, and how these controls, the confidence level will increase, assure the control levels and all. Okay, so just a what you call pictorial presentation of the website which I've shown to you. As I said, it's not like I'm trying to share, I'm trying to endorse or something, because as I said, these are all can be done pretty much easy, especially for those who have completed AICA certification and all. I think it's not so a big task also to create these kind of dashboards or whatever. But ultimately, kindly understand that the technology what we are using is not as a convenience. I'm trying to improvise my quality, because my quality as an internal auditor is the only way where I can build the confidence of the stakeholder. And the confidence is nothing but the reflection of the controls existing in the company. So this is where I end my presentation. And as I said, I'll try to share, I'm preparing a running notes kind of thing where I'll be sharing with the IASB, which in turn they'll circulate to you all. And as I said, let also see if I can share this pilot project with taking the consent from my partners and all. So thank you all. That's I'll stop my presentation. Let's take up any questions if we have. Mrudula, do we have any questions?
Thank you, sir. That was a very, very insightful and engaging session. The controls confidence dashboard is a really new concept, which probably most of us must have heard it for the first time. And if it gets, as you mentioned, this is a prototype. The dashboard is a prototype right now, and if it gets implemented, it could be really helpful in getting a deeper insight into our audits, and it can really help in doing audits in a different way, and beyond the traditional checklist audit which we have been performing since years. So this is a new concept, and it is a very good concept. So I hope this dashboard comes live, and it will be helpful for doing our internal audits in our future, in the era of AI and all the technological changes that are happening.
Yes.
So, sir, we have we request all the participants to drop their questions in in the box below. We already have two questions. This is a question from Mohammed Jafar. For black box testing, do you have any examples from your practice?
See, as I said, if we define white box, differentiate, basically, let's take a policy mandates that a particular approval has to be taken for, say, purchasing something, okay, or placing a particular order, and approval is required. So what white box checks, it confirms that whether that approval is existing or not. Okay, that's a white box. But when it comes to black box, it shows the approvals are pre-functory or post facto, what we call. Okay, so it just ensures that the exceptions have been taken care. Okay, it's not just merely going with the documentation or whatever it is in black and white. Okay, so we call it as post facto kind of activity. So that's one example what I can give. Probably another what I can think of is if I say white box shows the intent of the governance, saying that it has been articulated, the controls have been articulated. So where black box shows whether that governance intent has been honored by the system or not. Okay, white box shows the intent has been articulated through black and white in a proper documented, and black box actually shows whether that has been honored in the actual practice. Okay, so that's what. Say, I can't give a particular example because, as I said, this is a practice scenario where once we're dealing with emerging technologies and all, we can't merely go with, or probably I can take one more example is an ERP being used as part of a billing system. Okay, so a white box says that whether the billing system is gone through a particular privileged roles, and the data entry is happening from so-and-so roles, and the report is being generated, and the same is mapped to the MIS and all. Black box something saying that if the same controls are used in the same way, what are those unexpected exposures or creeps, control creeps, what might come, which may not be documented in the controls. Okay, so it's like I'm doing something out of box kind of thing, or more so, I'll not follow rules, I not follow patterns. Okay, I'll not follow any particular triggers. I randomize, or I come up with some kind of new way of testing that particular rules. Okay, so that's what I can probably. It basically validates the outcomes and detects any kind of unknown anomalies ultimately.
Okay. Thank you, sir. I think there are no more questions.
Oh. So is that they understood or they have not understood anything? I mean, usually either.
No, sir.
You know,
There are
questions
comments that the session was really great, and
okay.
most of the participants loved the confidence dashboard. So, as I
Very good.
mentioned, that is a different concept,
Yeah.
a totally new concept,
Great.
which should be used in our routine audit practice also.
Yes, yes, of course.
Uh, uh, with this, we will conclude the session. I thank Internal Audit Standards Board and our speaker CA Vijay Kotapalli for arranging such a insightful session. We are truly grateful for your time and guidance, sir. And we would definitely your session would definitely help us to perform our internal audits in a better manner. So we learned a lot of new concepts, like how the controls can give you confidence, and how even a little compromise in the control can have a bigger impact on the organization or on the processes and systems which are operating in an organization. So thanks a lot, sir.
Yeah.
Thank you, Internal Audit Standard Board, and thanks to all the support teams, and thank you all the participants.
Yeah. Thank you, Mrudula, for
Thank you.
moderating effectively. And thank you very much, IASB, once again, and the team of IASB. And more importantly, the participant for sticking to us till the last. Thank you very much. Thank you.
Thank you, sir. Thank you.